Hi everyone, this video is about different types of Forex account that you can open for trading in currencies or commodities or indices. This video is for the beginners because it will just tell about the basic account opening related benefits or types of account, or what deposit they need to keep, what charge it will be, as a comparison. So let's begin this video. So there is two types of account that you can open. One is CFD account, another is future trading. I put both in comparison to each other. So what is CFD? CFD is just, you cannot take the asset, you're just into a contract with other person, either you are a buyer or you are seller. If you are a buyer, the other party will be seller. If you are a seller, then other party will be the buyer, and you will just get the money for the difference in the price, or you will pay the money for the difference in the price of commodity or the currency. So let's take example. I just put one example here, that you buy gold at $1,800 per ounce, and the price go down to $1,790, $1,790. So this means you lose 10 dirham, because your buy is 1,800 and current price is 1,790. So if you close the contract, you will just pay $10 per ounce and your contract is closed. But in comparison to future contract, it is not like this. In a future contract, you agree to buy or sell an asset at a predetermined price at specific time in future. So how it will happen is, future contract, let's say you enter a contract in March, let's say March 24 contract. So and you buy a gold. So on March 24, you have to pay the full price of the gold, and you have to take the delivery. If you don't take the delivery, then it will be settled in cash also, in the same way as CFD is going. But difference here is that there is an option of delivery, and CFD is continuous contract. You can keep it for 1 year, 2 years, 10 years. You can buy and then hold it. There's no limit. But in the future, there is specific time and date at which you have to take the delivery, or you have to close the contract in cash. If you close the contract in the cash, it will be same as this example. But if you take delivery, let's say you buy contract gold for 1,800 per ounce for March 28 contract, and price will go down to 1,790. So you have to pay the full price to the seller, which is 1,800 per ounce, and you take the physical delivery. And other option is to pay cash of 10 and close the contract, and this 10 dirham is seller profit. So in case price go up and you are in the buy, then you get the money. Otherwise, if price go down, then you lose the money. So this is very, very basic, what is CFD and what is future. So CFD and future both has, if you go in cash, it will be same. But if you go for delivery, then future is different than CFD. So in CFD, what is other differences other than this? What contract agreement says, there's some other differences also there. I'm dealing in Dubai. I'm living in Dubai, and I'm dealing different broker in Dubai. So my experience is mostly in Dubai, and some international I also know because they call me and I check them also. So I'm telling based on that. If you open CFD account, usually you can open with $100 also, or $10 also. There's no limit. Even small amount they can, but you need to have some limited $100 or some nominal amount is there that you have to put to start trading. But if you open future trading, usually deposit you have to put more, because to enter a contract, let's say you buy gold, so every time there's a different rate, they keep changing the rate, but let's say you have to, if you buy one lot of gold, then you have to give, currently it's around $2,000 as a deposit you have to give. So let's say it's a minimum $2,000 you have to keep, and should be more than 2,000 because contract can go against you, and you can go in losses also, so you have to give more than 2,000. So there is future trading, there is amount is little more, you have to start a trading. Then in CFD, the low contract size. So you purchase a lot in both CFD and future. What the lot is, there is standard lot they are using. Let's say in future, they are using 32 ounce one lot. So you buy one lot, minimum you have to buy one lot, which is 32 ounce. So which is quite high. But in CFD, they will allow you even to buy, instead of one lot, you can buy 0.1 lot. 0.1 mean 3.2 ounce. You are buying 3.2 ounce. So your risk is less. Definitely your reward is less. Why I'm saying risk is less? Because if price go down by, let's say price go down by $10 per ounce, so 32 ounce mean 10 into 32 is 320 euros. But when it's come here, 0.1 ounce mean, you 0.1 lot mean you buy 3.2 ounce. So this means $10 loss mean, $10 decrease in price mean you just lose 32. So risk is less also. In the same way, profit is also less. Same in CFD, you will find tight spread. You will find up to $0.02 or 0.2. In gold, you can find 0.02 or 0.03, the spread size. But in future, it is 0.04 difference in price between buying and selling. The market maker will buy 0.04 more compared to what he's selling to you. Sorry, you buy 0.04, he will sell more 0.04, or you can say 4 cents more. When he buy 4 cents less. It's quoted price there. When you enter any demo account, you can go. For both CFD and future broker, they are offering you demo account. So you open a demo account first, and then you will know about this, what I'm talking about spread. You will know about it. Then fees also, CFD has low fees. They charge $3 or even less also per 0.01 contract. I'm talking about gold. Different type of commodity has different price, but I'm talking about gold. But here in CFD, it's $6 for buy and six point some dollar is for buy, and 6.2 is for sell. So it's around 13 dirham you have to pay for one trade. There's no interest in future contract, but in CFD you will find there's interest, but some offering without interest also. And they say it's Islamic, but actually it's not Islamic. It's Islamic require you to have delivery. So if you are Muslim and you want to do Islamic trading, then you have to do this future trading, because there is a delivery, and delivery is important to enter into a contract which is Islamic. So there's no delivery, there's a delivery option. This is not Islamic, this is Islamic. This is less secure, because I saw a few brokers going bankrupt also in CFDs. But future trading, it is not like this. As of my knowledge, it's legalized. There is exchange. Like in Dubai, there's the Dubai Gold and Commodity Exchange, and it's secure. I never see, as of now, my knowledge is I didn't see any bankruptcy there. So when you are trading, it is better. I'm doing future contract. It's more secure, it's more legalized, and it's Islamic also. You choose your own, but if you ask me, I will say it's go for future. It's because there is security, this is Islamic also, and if you are in other countries, check there. Try to go to the broker which is trading in exchange. So your contract is legally in exchange, like maybe COMEX, maybe some other exchange. Different countries like Pakistan has Pakistan Mercantile Exchange, India has MCX. So different countries have different exchange. So go to that exchange site and find the broker and open first demo account. 1 month, 2 month, practice on demo account, and then deposit money and start trading. This is a very basic idea about Forex account, and hope you like it, you get some knowledge from it. Please subscribe, and thank you very much for watching this video.